So as I have discussed in my last video about the positive move, but at the same time I have specifically said that although there is a positive move, but if you are looking at the range which is very narrow, and you must respect the support level because volatility is going to increase, and the same thing happened. You can clearly see the Dow Jones falters by more than 300 point, and then we have S&P and Nasdaq which has fallen 0.7%, and there is an increase in the volatility as well. So these are not right signs. Okay, loss of points in the equity market, and the increase of volatility, this kind of thing induces volatility into the short term as far as the equity market is concerned, and you will see moves on the lower side. Now with that, let us see how the stock market looks when the Nasdaq, Dow Jones and SPX started trading or opens on Monday. And as I told you, I'll keep on telling you one thing very clearly, and that is, market is trading with very thin volumes. So do not try to do something which you don't understand. Okay, so volatility is increasing, and when the market is trading with low volumes, you can see very sharp swings. But it does not mean that the market is breaking down. Okay, there will be huge amount of volatility on both the sides. So take this thing. Okay, don't think that there is a trend reversal and the bull uptrend is over and all those things. You need not to think about all those things. Correction and uptrend both the part of the same coin, so they are the different sides of the same coin. So when you have upside, you have downside in the stock market, and vice versa. As far as the current trend or range for Dow Jones, now 33,923 and 33,982 are indeed acting as your resistance level, and because Dow Jones already crossed and trades below 33,600, the next two support level will be 33,400 and 33,270. If the Dow Jones falls below 33,270, then the downside will open up, in which case the next two support or next two levels that we are going to consider as our next support will be 32,463 and 31,939. So either you stay out, or you just place your stop loss at 33,600, and you can move for 33,270 right now, below which a big downside will probably open up as far as the trend is concerned. Now let's move to the Nasdaq and let us see what's happening as far as Nasdaq is concerned. And Nasdaq, you can clearly see Nasdaq is not different, and here we have your resistance on the upside, or 11,147 is the level that you want to look at as far as the resistance is concerned. And because Nasdaq is trading just above 11,000, so it is very important. So if I may remove this level, there is actually no such levels, and the support, next to support, will be 10,947 and 10,917. Let's say 10,910, and if it falls below 10,910, the Nasdaq will move towards 10,746 and 10,350 on the downside. So this is what we're gonna look at as far as Nasdaq is concerned. Now talking about SPX, talking about S&P 500, which is the most stable one, and you can clearly see one thing is clear. If you do observe in both the cases, as far as Nasdaq and Dow Jones, it closed below the red line. This red line is nothing but the 200-day moving average, but as of now S&P 500 is still holding. Whether it will hold or not, that's going to be a big question, because the trend of the market is not at all helping the situation or helping this statement, or because the overall trend is on the downside. So if number one, because S&P 500 has already closed below 3,980 and 3,940. So the next two support levels will be 3,918 and 3,908. And if it closed below 3,900, then the next support that will open up for S&P 500 will be 3,860 and 3,740 on the downside. Okay, so these are going to be the next two support that we are going to look at. So overall, the situation does not looks good, and neither it favors the bull, and this is happening with an inducement of volatility in the stock market. Obviously the volumes are going to be less, and that's why we cannot call it as a justifiable moves, which means the stock market may move on the downside with big volatility, but because this is the last month of the year, and we cannot justify these moves beyond a certain point. So don't try to be in a frame of mind where you can think that the market has changed its course of action. It is nothing like that. For that we need to wait. As of now, this is just a short-term correction. Consider this as a short-term correction and try to find good level, strong level from where a potential buy will come up. And as I told you, till 10th of January next year, you will see less volumes because of everybody is on holiday. That's the main reason. So this is the end of the video. Thanks for watching.